Hello and welcome to Global Business as we bring you the latest developments in the business world. From Nairobi to Johannesburg, from Cairo to Lagos, we will be bringing you entrepreneurs that are hitting business headlines. I'm Penina Karibi in the Kenyan capital, Nairobi. It's 9 p.m. here in East Africa. Wherever you're joining us from, welcome to the show. Coming up, tackling tax evasion will again be high on the agenda at this week's G20 summit in Brisbane in Australia. So what's in it for Africa? Uganda makes an aggressive move to increase its tax base. And later on, we meet a Nigerian entrepreneur who's making waves in alternative energy. Global financial institutions have lauded the move by the G20 to place emphasis on infrastructure development under the new G20 Global Infrastructure Initiative, saying they look forward to contributing to its implementation. The African Development Bank, the Asian Development Bank, the European Bank for Reconstruction and Development, the European Investment Bank, the Inter-American Development Bank, the Islamic Development Bank, the World Bank Group and the International Monetary Fund noted that infrastructure is key to tackling poverty and promoting inclusive growth while easing access to basic services, especially for poor people, linking producers to markets and connecting countries to the opportunities in the global economy. The lenders, however, go on to note that infrastructure investments need to be sustainable fiscally, economically, socially, and environmentally. Now, the G20 summit in Brisbane is barely hours away. Until the G20 was created, many of the global issues such as economic growth, employment, tax, corruption, energy and investment were tackled either regionally or within economic groupings. Now, think tanks are grappling with the African continent's economic challenges and expectations. CCTV's Angela Kopler reports from South Africa.
For many observers, the G20 meeting will not produce a magic wand and resolve the continent's ills. The developed economies will assist countries with non-trade related issues, but that's where it'll end.
I think what we need to understand in Africa that the developed economy, the Europes, the Americas and the Asian successful economies are going to help Africa, but they're not going to come into the mainstream of the trade line where we're going to become competitors. And so why would they create competitors? And it's not in their interest to do so.
Others take a more holistic view, suggesting that it's time the continent worked together and developed a consolidated view and position.
At this point in time, I think there's an opportunity for the African Union and other platforms that are representing Africa, the UN as well, that also participates in those kind of meetings, where more Africans are involved in, should play a role actually in pushing the African agenda.
This is easier said than done. There may be another approach, but it's also fraught with challenges, getting more African countries represented at the G20.
The easiest way would be first to expand the group slightly, although that's possibly the most difficult politically, because then it's not only an African issue, it's representation of other groups. You could have, for example, the Middle East claim that they only have one representative in Saudi Arabia, so they should get more seats.
There is another option, and it means participating in meetings before the summit. The Australian government has held 60 such meetings, and this is where African interests would be best served.
It would be, I think, quite beneficial for the African continent to have a deeper engagement, and I think that would involve engagement in these preparatory type meetings.
Expectations vary, but the common theme is one of action. The talking has been done.
So, for example, an important issue for our continent is infrastructure development. The G20 spent a lot of time looking at what are the bottlenecks in the financing of big infrastructure projects, particularly those that go across borders. They've identified some of those constraints in the banks themselves, who are not necessarily structured appropriately. So why don't we make those changes now?
G20 does comprise a very large portion of global domestic project, almost 80-90%. So in that regard, even if the upliftment of that major group will already cause Africa to start moving into a position of what is needed. Will they become the new production hub instead of India, as suggestions have been for North and West Africa?
However, there is a more pressing concern, and it's about dealing with the Ebola virus epidemic.
Even the African Union is calling for the international community, and we're calling the G20 leaders to step up action on the ground and prevent the crisis, the epidemic from spreading further.
While everyone's focused on how Africa can get more representation on the G20 table, the bottom line is that South Africa and Africa have to do it for themselves. They can't rely on another grouping to try and fix their problems. I'm Angelo Coppola for CCTV in Johannesburg.
Global non-profit ActionAid is calling on the G20 meeting in Brisbane to clamp down on tax dodging and ensure that companies doing business in Africa pay their fair share of tax. Ebola-struck Liberia, Sierra Leone and Guinea have been losing more to corporate tax dodging than they spend on healthcare. That's according to the international charity. Now, the three countries worst affected by the Ebola virus lost an estimated $287 million through corporate tax dodging in 2011 and spent just $237 million on health. Now, before the outbreak, the three countries had an average of one hospital bed per 2,128 people, while Australia has one hospital bed per 262 people. The African Union estimates that Africa loses up to $60 billion each year due to tax dodging by big companies. That is more than they receive in aid from rich countries. While making this call, ActionAid warns the current G20 plans known as the base erosion and profit shifting process to tackle tax dodging will do little to help African and other developing countries ensure multinationals pay their fair share of tax. Now, while ActionAid made this call today, effectively tackling tax evasion will again be high on the agenda at the G20 summit in Brisbane, Australia. At last year's meeting in Russia, leaders agreed to a treaty aimed at making it harder for money to be moved to secret destinations and to force global companies to pay taxes on their profits in countries where their operations are based. Now, tax avoidance costs developing countries billions of dollars, money that can be allocated to infrastructure development. Sumitra Naidu reports from Johannesburg.
Tax havens are not new to the world, neither are they illegal. Multinational companies and wealthy individuals use them to limit their tax payments. The practice leaves many countries, especially those in Africa, shortchanged.
The amount going out is actually, by certain statistics, at least in our region, double the amount of aid. So you can only imagine how, if that those outflows are challenged to governments, how much more that they could do to improve public services such as education, public health service to combat poverty in developing countries.
Africa loses around $40 billion every year due to illicit financial outflows. The Africa Progress Report estimates that the continent has lost over $1 trillion in the last 3 decades. Most governments in Africa offer tax breaks to attract foreign direct investment, but they're now also attaching conditions to those investments to ensure their sustainable development.
They need to negotiate with the large investor. For example, to say, if you want to come and provide a whole, thousands of locomotives for us, you can do that, but you must set up a manufacturing facility in South Africa. You must have a proper black economic empowerment partner. You must have 60% local content, for example.
Global brewer SAB Miller has been accused of costing Africa $33 million a year for flighting its capital to 65 different destinations. Global search engine Google and coffee house Starbucks are also said to be guilty of tax dodging.
As far as the tax laws are concerned, companies may be able to work within the tax laws and legally reduce their tax bill to a very low effective tax rate. But things are changing. The global opinion is changing. And companies have to be very careful about their reputational risk.
Earlier this year, G20 leaders agreed to a plan to root out tax evaders. The new regime will allow for the automatic exchange of tax information between countries. Leaders meeting in Brisbane this week are expected to set a timeline for the plan's implementation. Once in place, tax evaders will have less room to hide. Sumitra Naidu, CCTV, Johannesburg.
Right, so let's discuss this further. Here in studio, I'm joined by Kwesi Obeng of the Tax Justice Network Africa. Thanks for joining us here in studio. Mariam Bemad is live for us in London. Mariam, thanks for joining us as well. And let me begin with you, Mariam. Have the G20 nations done enough to support infrastructure, a key concern for economic development around the world? I mean, can we expect any new initiatives at this summit?
Well, Australia itself has already pledged to establish a global infrastructure hub to be based in Sydney, and it would match investors with infrastructure projects and help establish uniform rules for risk assessments and other practices. So far, Australia actually hasn't been able to convince other countries to make those major financial contributions. The concern right now is to avoid duplicating work that's already being done by the World Bank. And analysts that I spoke with say that we have to remember that the G20 doesn't actually have any treaties or legal instruments to back up decisions or power to force member nations to do anything. You know, we saw that back in 2010, as you recall, when BRICS nations were asking for more power over funding and changes to the IMF and how it was governed. But we may see more discussion about these changes in South Africa's infrastructure, perhaps the constraints that we've been seeing expected to be lifted starting in 2016.
All right, and coming to you, Kwesi, I mean, G20 leaders have a unique opportunity to reform the global system globally. Do you think enough is being done to reduce or ultimately bring an end to erosion of tax revenues for Africa, especially by multinationals?
Well, thank you. To start with, depends on what you mean by enough. Be that as it may, I don't think that we can classify what's been done so far and what we can project to see as enough. To start with, I mean, the point is that the G20 work is handled by the OECD, and essentially that's a club of rich countries. Their primary objective is to pursue the interest of the club of rich countries. And so the measures are not meant to address the peculiar needs of developing countries, let alone a region like Africa. And so I think that not enough is being done.
Right. Mariam, coming to you, can we expect to see more funding for preventative measures against Ebola? What can we expect from the G20?
Well, you know, experts that I spoke with say that 9 of the G20 countries have actually failed to deliver any adequate support in the fight against Ebola, despite calls for more help and the fact that, you know, they're the largest economies in the world. And of course, the World Bank has committed about $1 billion to Ebola, but it's also warning that if the virus spreads to neighboring countries, the economic cost would be anywhere between 27 billion and 32 billion by the end of next year. Although we haven't actually heard anything officially just yet, there's been talks on the sidelines ahead of the summit for a multi-billion-dollar emergency fund to tackle future pandemics, and it would be similar to the Central Emergency Response Fund that was set up back in 2005 by the UN to finance rapid relief after natural disasters. But really, it's a case of whether we see any sort of relief or more financial aid for what's actually happening right now with the Ebola epidemic.
Yeah, and speaking of Ebola, Kwesi, I mean, you've seen what Action Aid is saying, that the 3 countries worst hit by Ebola lost about $287 million through tax dodging in 2011, as compared to $237 million that was spent on health. So, question is, what significant steps can be taken towards curbing tax dodging, and do you think they can have any significant impact?
Well, I mean, I think Action Aid's figure is actually looks at the lowest end of the cost of tax erosion in these countries.
Yeah.
There's a substantial part of the revenues that ordinarily these countries should be actually accruing to these countries go not just simply through the raw erosion of tax, but also tax incentives. These countries have been since their wars ended, have been in a race down to the bottom. In other words, dishing out huge tax incentives that actually the IMF itself claims that actually they are irrelevant to draw in investors to these countries. And so I think that we have to understand that the 287.6 million they're talking about is actually the lowest end. I think that it's important also for these countries to understand that they need to invest in infrastructure in their own countries.
Right.
And what that means is that they do not have to give out those tax incentives. And if they categorize those incentives and invest them back in the health structure, I think that it would help these countries to recover from the current problem, because what we are seeing currently is that the lack of investment in basic social infrastructure is the reason for the explosion for this epidemic. And I think it speaks to also the poor advice these countries have received from the international financial institutions like the IMF, and of course policies pursued by the OECD, which actually allows companies to shift profits away from the countries in which they make the profits.
Right. Mariam, last month, the IMF said that sub-Saharan Africa needs more efficient investment planning. So how should this come about? What are analysts saying on your end?
Well, many analysts agree with the IMF's recommendations, but as we were just discussing, it's really about reinvesting in the proper infrastructure. You know, recommendations that countries in the region should adopt a mix of policies that allows them to take advantage of various choices to secure financing. Now, the challenge is also to control fiscal risks and maintain debt sustainability, of course. But experts say that governments need to consider that infrastructure financing comes from things like public investment, public-private partnerships, and private investment. And these all come with their own advantages and pitfalls. And the solution could be through stronger regulation and policies that actually help overlook the progress as well.
Right. And finally, Kwesi, the ActionAid is warning that the G20 plans, namely the base erosion and profit shifting process to curb tax dodging, will do little, especially to help African countries and developing countries make sure that these multinationals pay their taxes. And I mean, one could agree, given that Africa has just one seat on the G20, and obviously it accounts for 14% of the global population. So what should be the way forward?
Well, two things. I think I need to point out that the BEPS process, as I said, it's a process under the OECD. It is not meant to address the difficult challenges faced by African countries in terms of curbing tax erosion. It is actually a fight amongst rich countries as to which amongst them gets the most of the benefits from their multinational companies. I think that G20 in Brisbane is a great opportunity to address some of these difficulties, to address some of these challenges, because I think you have to draw the linkage between the erosion of what is naturally should go to these countries in terms of revenues from their natural resources. You can link that to some of the difficult global issues like, you know, coup d'etats, conflicts, and of course terrorism. And I think that the G20 in Brisbane offers the world an opportunity for us to chart a clear path forward that is inclusive. It's important because the process so far has excluded developing countries. Africa is not represented.
All right. We've got to leave it there. Kwesi Obeng, it's been a pleasure speaking to you. Mariam Bamad, live for us in London. Thank you for joining us. Well, let's have a look now at the markets. And all the major bourses that we track here traded in the red today, except the JSE All Share Index, which gained marginally, closing at 50,425.2. Still ahead, Uganda makes aggressive move to increase its tax base. And we take a closer look at South Africa's burgeoning security industry.
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
Food security is a major challenge for most African nations, yet agriculture is a backbone of these economies. But with technologies like hydroponics, there is hope of food availability all year round.
Welcome back to Global Business. Now, the head of the Uganda Revenue Authority says more tax should be collected from the country's agriculture sector. Dorissa Colesworth's CAM, as Uganda reports its highest growth in tax revenues compared with the 4 other major East African countries in the period between July and October this year. Regional revenue growth rates for the first quarter stood at 14.3% for Uganda, 12% for Tanzania, 11.2% for Rwanda, and 7.9% for Kenya. CCTV's Michael Baleke has that report in What's Hot tonight.
Tax officials in Uganda say the growth in the first quarter of 2014-2015 is down to an increase in fuel volumes imported into the East African country. Other non-fuel imports, especially construction materials, have equally contributed to this growth.
For example, when you talk on cement alone, we have got the Karuma taking off, we have got the Kampala-Entebbe Express Highway, you have the Isimba Dam coming on, and several other projects. Now, when you look at the cement that we have here, actually it cannot meet that kind of demand.
Authorities say net revenue collections amount to $1 billion, a 15% growth from the same period last year, but now wants a tougher approach. The tax body is also looking at tightening the tax net to target more people in the informal sector who they believe are not handing in a fair share to the revenue basket. In her first revenue report, the new Commissioner General for the state tax body says this performance has also resulted from a drive to get more members of the public into the tax bracket.
People who are supposed to be in the tax net, but they are not. So when we link up with those who issue them trading licenses, for example, who issue them with business licenses, we are able to get access to them, and then we'll help them to comply.
ACOL wants more revenue from Uganda's agriculture sector, which employs the majority of Ugandans and remains the economy's backbone.
We cannot expand our agricultural sector, which takes the largest part of the GDP, and leave it in an informal way.
Taxes stemming from people's wages have fallen due to the laying off of staff in the oil and gas sector following a fall in business activity. Michael Baleke, CCTV, Kampala.
A quick check of the commodities now, and the oil prices hitting new 4-year lows, with Brent crude now down to $78.71 per barrel, and that's a drop of over $1.50, so just about 2% today, amid talk of the oil market being flooded with supplies. And straight ahead, we meet a Nigerian entrepreneur who's making strides in alternative energy.
BizAsia. Asia means business.
You're watching Global Business. Welcome back. Across Africa, over 500 million people continue to rely on solid biofuels like firewood for their energy needs, and it comes with a terrible cost. WHO data from 2004 suggests that 28% of deaths in Africa can be linked directly to their use. Most of those affected are women and children. Given such costs, one Nigerian entrepreneur, Femi Oye, decided to tackle the problem by developing a cleaner alternative fuel from sawdust, water hyacinth, and even waste paper. His conversation with CCTV's Roman Yang informs our grassroots segment tonight.
Femi Oye started this whole project about 8 years ago when I started with the solar solutions, targeting just the BOP market. And in 2010, we moved into the biofuel based on the aspiration of our people.
Because the consumers came to you and said, look, we need this solution.
Exactly. Seeing the difference that these have been able to make in terms of the cost, saving them money, and they have more money to put out to do other things. And of course, it saves them the time. They don't have to go to the woods to fell trees any longer, or being raped our girls are being harassed and molested. And of course, when kerosene scarcity strikes, then you see women staying days on the street, just scrambling to get kerosene that will never be available. So the alternative is what I lead my organization and my team to create today, that brought about the emergence of the biofuel cook stoves.
Apparently, even for petrolhead like myself, with a bit of post-processing, I can run my car on this. The benefit, however, isn't really for car enthusiasts like myself. It's for the millions of Kenyan households who utilize either firewood or kerosene for their daily use, specifically for cooking. The health costs involved just from the soot, the poor eyesight and so on is a huge, huge burden, not just on the individuals who are affected by it, but on the taxpayer as well, as far as healthcare costs are concerned.
In Nigeria alone, like we have all over the world, over 2 million deaths occur every year as a result of indoor air pollution. In Nigeria, the staggering figure is about 100,000 women die as a result of this. We have, between now and 2018, we're doing 3 different fundraising. The one that we are concluding now is the initial one of $27 million. So that should be concluded in another 3 months from now. So we've gotten all the investors on the table, and then by 2015, January, February, we should be signing that. And that will take our production scale to about 10,000 liter capacity per day. That will give us about between 5 to 6 million liters of bioethanol every year. But this is still not sufficient to just serve the little market of Nigeria alone. Today we are in Ghana, we are in Cameroon, we are in Mali, we are in Port Novo, that's in Benin Republic, and a lot of other African countries. However, because of the scale of our production, we are unable to meet this demand. As a matter of fact, a typical family will need nothing less than 100 liters of this on the average per year. And we are unable to even serve 20% of that market today.
Now, in the hour or so since we spoke to Femi, he's been getting attention not just from SMEs who are interested in his business plan and also in the product that he's selling, but also from financiers, banks, private equity, the lot, you name it. And what that tells you is the depth of demand for more efficient energy solutions across the African continent. Pick any African country, the dominant fuel that will be utilized, except maybe for South Africa, would be biomass, especially firewood. And if you can replace that from the household energy expenditure plan, you not only drop costs, but the health benefits at play as well. If the sort of interest Femi is getting is anything to go by, the African energy market is set for some interesting upheaval.
Oh, that's Ramanyang there for us. The currencies now, and the Kenyan shilling is likely to reverse its recent losses against the dollar as the decline is driven by the strengthening of the U.S. currency since September. That's according to the central bank. The shilling has fared better than other currencies like the Tanzanian and Ugandan shillings, which have lost 3.26% and 4.73% respectively during that period earlier today. It hovered at a 3-year lows, trading at 90.05 to 90.25 against the dollar, finally settling at 90.30 to the U.S. dollar. And that's it for this edition of Global Business. Remember, you can send your feedback to Global Business Africa at cctv.com. You can visit us on Facebook. Our page is CCTV Africa. You can also stay in touch with Global Business on Twitter using the handle at CCTV News Africa. I'm Penina Karibe. Thanks for watching.